Welcome to Trading Nation. I'm Sara Eisen. Take a look at consumer staples in free fall this year. The XLP Staples ETF sinking 13% in 2018. The XLP is pacing for its worst year since 2008. This as we see interest rates surge. Matt Maley is with Miller Tabak. Dennis Davitt is with Harvest Volatility Management. Matt, you say it might be so bad it could actually be good. Why?
Well, exactly. It's funny. I mean, you look at the long-term chart; it looks absolutely horrible. It's it's broken below its trend line going all the way back to the crisis lows back in 2009. It's broken below its 2017 low, its 2016 low, et cetera. Its 200-day moving average, et cetera, even its 200-week moving average. However, the stock, the one thing that we see now is that in the most recent decline, volume has kind of petered out. So I'm starting to wonder if the thing's getting washed out a little bit, number one. And number two, if you look at its weekly RSI chart, it's about as overbought. It's as overbought as it's been since, again, those 2009 lows. So I'm kind of hoping the thing can bounce back a little bit. But with so many stocks flat on their back, it's hard to be real confident about that. But there is one name that looks enticing here, and it's Kroger. Here's a name that they had a positive article in Barron's over the weekend talking about its fundamentals. But on a technical basis, it's one stock that's made a nice higher low and starting to bounce up a little bit, and it's testing its trend line going back to the 2014 high. So if it can move a little bit higher and get above that trend line, following the higher low, that could be a stock that could work well. And then, Kroger looking for upside of 25% from here, and if we kind of get above that trend line, they might indeed be able to do that.
Yeah, maybe a little turnaround there. Dennis, no shortage of bearish arguments when it comes to this group. How does it look to you?
Yeah, the thing that I find really interesting about Kroger and XLP is in the volatility world that I live in. We do not see increased premiums for options on either Kroger or on the XLP ETF. And that's surprising to me. With all these negative stories, you think people would want to be insuring their portfolio. So if you look at Kroger, there's a 25 struck call, which is the right to buy Kroger expiring in June. That's trading for about 60 cents. So if we see a snapback in that individual stock, if it continues to fall apart, you're at risk for 60 cents. But if we do see a recovery, you participate. At minimum, it has to get up to $25.60, and people are calling for $30 price targets. So that's where I see a real opportunity in the options market. And in the overall XLP, there are two things that really weigh on it. I think higher interest rates, because these are high dividend stocks. They've been hit by higher interest rates. People feeling that they're not going to be as attractive, so people are moving out of those stocks and moving into maybe just plain old debt yielding instruments. And higher commodity prices, with the inability to pass on that higher commodity price to the eventual consumer, which is the Amazon effect. So interest rates and commodities are two very volatile instruments leading to this sector selling off. However, the volatility of the options in the equity sector are very low. So there's not an option in the XLP or in Kroger that I would want to be short right now.
All right, interesting 1-2 punch for staples right now. Matt and Dennis, thank you both for being here today. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.